So there are certain stocks that have a new option listed every day that it will come up with a zero DTE. So like for example, SPY, will have a zero DTE option because that one is very popular. So on a daily basis, you'll see a zero DTE option. So you see here every day, September 24th, 25th. So they'll list new options, and that option will have a zero DTE every day. So it happens I'm not sure if it happens let me see if IWM, has that. I'm not sure if it happens in every stock. So IWM appears that it does, probably QQQ. But not every,
Probably all the ones where people are demanding them, right?
right. So like here in Apple, right? Apple is a popular stock, but you could see it doesn't have a zero DT. It's September 27th is the next expiration, October 4th. So those zero DTEs don't, you won't be able to find them every day on any stock. It's very, you know, uh, probably particular to stocks that there's a big demand to trade those, and that there's a lot of volume in them already on a daily basis. So you could see even something like Apple doesn't have it. Let's see Tesla. We could just look at some popular ones. So even Tesla, you could see here like the next one, September 27th, October 4th. So they don't also have zero DTE options available to trade. You're looking at a small group of stocks. Okay. Most likely it's just those ETFs. Let's see another popular stock itself, NVIDIA. So even NVIDIA, you can see here, September 27, October 4th. Now, certainly once September 27th comes around, well, that one will become a zero DTE option, right? Because it expires. It expires September 27th. Um, so that's the idea behind is that there's certain stocks that may have a zero DTE on a daily basis because of the way the options are listed. Some don't have it on a daily basis, but when expiration comes around, then it might be a zero DTE. So let me just see how, if even we screened out, let me see if I could use like I don't know, let's say like long calls. If I was just looking at, for example, just calls, uh, we could look at the expirations available. So yesterday, today's 23rd, but if we were looking at yesterday's, here are the expirations available. If we just screened out, show me September 23rd options, we click on that. And now, we only had one, the QQQ, that showed up that met any of these other, or whatever thresholds we have. Let me see September 24th. Okay, so here's September 24th. So this is as of yesterday's
So
close.
this is basically a way to screen for what's come, and we're seeing it's all what you talked about, right?
Well, yeah,
SPY,
because you could just
Q,
pick the expiration.
yeah.
Today's is September 24th, right? So these would be the options available. Um, Now we do have certain thresholds in place for these options. So if they're very far out of the money, we might not list, so here's a 7 delta, but I don't know if, uh, 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 there are certain thresholds in place that we have to meet these criteria. You can see here they usually will have volume. So here's the volume in them. So you could just
Yeah,
sort
well,
of,
one of volume is what he was looking for, volume in the options. If it doesn't
right,
have volume, it's irrelevant to him because he wasn't looking. He was
right,
like, is there a most unusual option report for zero DTs?
right. So this would be, for the calls, and you could do something similar, let's say for the puts, let's say long puts. So this screener itself is trying to analyze the option from the perspective of the ask price of the put. So it says, well, if you had to get long a put in and pay the ask price, let's analyze it from that perspective. So here, let's just see September 24th, the 23rd is already expired. So these would be, as of yesterday's close, SPY, QQQ, IWO. So it looks like those are the only ones that we picked up, but these are in the puts. So if we just sorted it by volume, right? Here's the most active 135,000 contracts traded on the September 4th 569 put. Okay, so that's the 569 put. Then 97,000 contracts traded on the 568 put, and so forth. So that's kind of like a quick way just to go get the volume of the most active option. Now, of course, once you go and click on this option, you could analyze it from a lot of different perspectives. Just go to the options chain and analyze. But if you just wanted to really quickly, just screen and sort it out, then, these will be the options. Now, when September, let's say 27th comes around, let's say September 27th, you're going to get these, but in addition, there are going to be September 27th options, so you could see here, NVIDIA, Apple, Tesla, they'll start appearing because on September 27th, essentially they become zero DTE. Same thing. Zero DTE just means it's going to, after today, there's no more days left. It expires at the end of the day. So then these will make it onto this list as well. That's if you're just looking for a quick way to, find calls and puts that are zero DTE. It does have to meet certain thresholds, that we place in there. But this would be, a quick way to, find some zero DTE options that are trading. Okay. If you're looking just in general, options volume, like unusual or where there's a lot of options volume, you could go under options. We have options volume reports. So here we have a list of stock symbols that have options listed. So over here, we see that there are 5,642 stocks that we found that have options contracts listed and available to trade. And we have summary stats on the trading volume. So this is from a high level. And it's sorted right now by default by the highest notional dollar traded. So what this will do is convert not just option volume, but the dollar value of all the trades, sum them up and say, well, where are the highest dollar value, highest volume based on the dollar value traded. So Tesla up here, 1.3 billion. You could see SPY traded $1.1 billion worth of option contracts, 600 million in QQQ and so forth. We could change it from notional to just volume. So I'll click over here. So now we see the volume. So now let's just resort it by volume. So then SPY comes up top, right? Because you could have volume in a contract that's a penny or 2 pennies or $1. So the volume and the dollar value will be different because the dollar value of each contract is not the same. So here we see that if we did it by most contracts, then SPY makes the top of the list, and Tesla falls to number 4 place. So there's a, difference there. But let's just kind of review this particular screener since we're already on it and see what other, statistics, metrics we have to give us insights. So here we see SPY. This is the dollar value and price change of SPY. These are the number of individual trades. So a trade, when you have a trade, it could be for different quantities. You know, one trade could be one contract, or you could do one trade in 100 contracts. So a trade is like a transaction, right? But that transaction or trade could have any amount of volume attached to it. So then we have the volume next to it. So these are the total contracts, 6.8 million contracts. How does that compare to the daily average? Well, is 6.8 million high, or is it low, or is it in line with what we typically see for trading on a day? Well, we need a statistic for that, right? We need something to compare it to. So this is looking at the last 90 trading days, and summing up the volume, dividing it by the days, and we see the average daily volume in SPY is 7.7 million. So it's pretty close, right? It's not really far below, it's not really far above. And if we had to take the ratio just to make it easier for us to compare, you know, one stock versus the other, this is the ratio of today's volume divided by the average, 0.88. So if the volume today was much higher, this ratio would be above 1, or much higher than above 1, because that you know, today's volume divided by average, you know, would create a higher ratio if today's volume is greater. But this allows us to quickly scan with our eyeballs or sort, you know, where the volumes themselves, for example, are greater than the average. So here in Intel, we saw that yesterday's volume relative to the average is 1.7, almost 1.8 times its average. And here we could see that the breakdown of the volume, call versus put, is 482,000 contracts in the calls, 185,000 in the puts. And just to get a percentage, you know, what are the percent of the calls or percent of the puts? We just put in the percent of the volume in the puts. Obviously, the remainder would be in the calls. So 27.7% of the volume were in the puts, meaning the majority of the volume were in the calls, right? So that's how this, you know, over you know, 72%. So that gives us kind of an indication how some of that trading volume was distributed. Additionally, when you trade options, well, you could enter in a buy or sell of an option, right? A single leg trade, buy or sell call, buy or sell put. So that would be what we call a single leg trade, single leg transaction. You could also enter in a spread, like a call spread or put spread or butterfly or you know, whatever you want, you know, time spread. You can enter that trade as a particular strategy or spread, and if you enter it in as a spread and gets executed as a spread, right? So you want to do a call spread for this price. Well, that means that you need to get both sides of the transaction filled at whatever conditions you specify. So that will get tagged as a multi-leg trade. So here we see that 9% of all the volume were multi-leg trades in Intel. Okay, so the majority of them were single leg. There's another trade condition you could enter in that gets reported on the tape, and that's contingent. So contingent trade typically will be tied to stock. You don't have it could be tied to something else, you know, I don't know, like a future or maybe another option, but it's typically tied to stock. And if you enter it in that way, it will get tagged contingent. So 2% of yesterday's trades in Intel were contingent trades. So contingent trade, as an example, would be a buy rate. If you entered in a trade that needs to get executed where, let's say you want to buy the stock and sell the call simultaneously for a certain price. Well, that's contingent because you need both the stock and the option, right? And it's contingent because the options exchanges, they don't list and trade the stock itself. That's traded on the stock exchange, right? So when you're looking at the options exchange, well, those don't report stock trades, right? Those are reported on the stock exchange. So, like New York, NASDAQ, ARCA, whatever, they have stock exchanges. Then you have options exchanges. So what happens is if you need both sides, you can have one transaction on the options exchange, and the contingent part has to get reported somewhere on a stock exchange. Right? You need to cross it somewhere, or make sure that both transactions, get executed, because you have to deliver both. You have to deliver the option and the stock, right, to the counterparty. So that's a contingent trade. 2% of them were contingent. 2% of those trades were contingent. So that's kind of quickly, scanning through. And then we could use the filters here above. Let's say we wanted the relative volume above 4. We can do that. And now we have all the relative volumes above 4. So you could see here the top one traded 94,000 contracts in 2 machines. And this is all sorted by volume. We could go to 3, let's say 3. Okay, now 2. So if we go above 2, FXI made it, 253,000 contracts. Then you got a couple single stock equities. So that's a real, and if we scan it in FXI here, you'll notice that more than half of the trades, right, 49% of them were in single leg trades. More than half were either multi-leg trade or contingent trade. So we could go and even look at that. We could click on this, and then it'll take us to the multi-leg analyzer, right? So this is FXI. This is our multi-leg analyzer. So we see a couple big trades here. One involved right around the end of the day, 40,000 contracts, and it was a put with a delta hedge with stock. So it was the Jan 17, so longer term, 26.85 strike put tied to 1.5 million shares of stock. So this has 116 trading days to expiration. Sorry, 116 days left to expiration. And you can see here, the price of the put that traded, the bid and offer, and where the stock was. So we could open that up and we could get more details on it. Right. So you could see here that the strategy had a 1.52 million delta, according to, the delta we ran. The stock, you could see, was 1.56 million, indicating it was a delta neutral trade. And here's the options trade. Okay. Same here, the next big trade. So you could see it had a few sizable option spreads. The next one, it was at 1028, 30,000 contracts traded. And this was a ratio call spread, March 21st, 179 days out. So a couple longer term strategies. And this was a ratio spread. You can see here, March 25th, 2831 call spread. 1 by 2. See, 1 by 2. Let's look at that. So I open that up, and here are the accumulation of trades that we discovered. So you could see the 28 strike and 31 strike. And if we sum these up, it was 1 by 2. See, 10,000 by 20,000. And these are the prices. So here you could see that it was, that this traded, sorry, I'm just looking at it just to see if I could get some more insight. So over here, one thing also we could see is that this was on a floor trade. And that indicates that this was a negotiated trade between, broker dealers, where it's either, between brokers and specialist brokers and market makers, but there's a negotiation going on where there's human touch. Floor trade means there's a human touch. It wasn't just electronically executed, that it involved some human touch, where, an actual broker went on the floor and executed this transaction. And we could kind of tell because he did a little bit of split price. So you could see here between 57 cents, 56 cents. And it went up on the box exchange, it looks like. So I don't know if the box exchange has an actual floor, or they are able to do a broker by phone and put it up. I'm not sure how that works well, but
I think they did open a floor in Boston, but I'm not
oh, you have a floor? Okay. So there
I
might
think.
be an actual floor presence, or maybe that there's, a, some kind of mechanism where it wasn't like just send an electronic order in, but, it looks like it had to have some human touch in it because it was a designated floor trade. But right, well, I'm right up at 9:30. I'm going to stop right there.
Awesome job, D. As usual, thanks for asking Scott's question. We did have a question from Rob concerning a takeover in the oil and gas business and how it may affect the dividend. Maybe we'll try to get to that tomorrow. He sent us an email. Awesome job, D. Thanks for the questions, everyone. Have a great day. We'll see everyone tomorrow. Bye, buddy.
Bye, everyone.